Welcome to this explainer. Look, buying a home here in the beautiful state of Kentucky, it's a huge deal. It's an incredible, super exciting milestone, right? But let's be totally honest for a second. The numbers can be downright scary for new buyers. But hey, together, we're going to remove that fear of the unknown by mastering the numbers first. Because before you even look at a single listing, you absolutely need to understand your financial limits.
So let me ask you something. Have you ever actually stopped to wonder if your absolute dream home is, actually in your budget? It sounds like a simple question, but man, so many people just dive headfirst into house hunting without truly knowing their financial limits. Going to open houses and falling head over heels for a property before you know what you can comfortably afford, that is a dangerous game. It often leads to heartbreak, or even worse, decades of financial stress. You've probably heard that old proverb that goes, the best time to plant a tree was 20 years ago. The second best time is now. Well, buying a house is essentially planting your financial tree. It's a massive long-term investment, honestly, perhaps the biggest one you're ever going to make. Starting your financial planning and running your numbers today is literally the smartest move you can make to set yourself up for a really secure future. Okay, let's dive right into this. Section 1, the home buying math problem. For decades, trying to figure out your mortgage debt by hand was just, well, frankly, a massive headache. Doing this kind of complex loan math on a piece of scratch paper isn't just painfully slow and overwhelming. A single tiny miscalculation can completely wreck your entire budget. But by using a digital calculator, the whole process becomes instant and highly precise. It frees you up to actually focus on finding a great home instead of pulling your hair out over the math. Moving right along to Section 2, uncovering the hidden costs. And this brilliantly illustrates a really dangerous misconception. A mortgage payment is never, ever just the sticker price of the house divided by 360 months. No way. Your payment actually breaks down into several different parts. Beyond the basic principal and interest, you've got property taxes and homeowners insurance, which together are known as PITI. Oh, and if you put less than 20% down, lenders are typically going to tack on PMI, or private mortgage insurance, until you build up enough equity. To put this into perspective, it's wild how much just crossing county lines matters here in Kentucky. Take a look at this. If you buy in Lexington, Fayette County, you're looking at an estimated tax rate of about 0.86%. But hop over to Louisville and Jefferson County, and it's 0.85%. Down in Warren County, it drops to 0.74%. These specific local tax variations directly change your monthly payment, and a good calculator just factors this whole shebang in automatically. But wait, there's more. We've got those sneaky hidden fees to think about, like closing costs, which usually eat up, 2 to 5% of the entire purchase price right out of the gate. You also have homeowners association fees, the Kentucky real estate transfer tax, which is commonly estimated at 50 cents per $500 of value, and of course, everyday home maintenance and utilities. Overlooking these can lead to a severe budget shortfall and leave you totally house poor. That means all your cash is tied up in the property, leaving absolutely nothing for emergencies or, actually enjoying life. This is exactly why guessing just isn't an option. Which brings us to Section 3, your financial crystal ball. Think of a Kentucky mortgage calculator as exactly that, your personal financial crystal ball. As financial experts will tell you, the goal isn't just saving a few bucks today. It's about understanding the long-term ripple effect of these massive investment decisions. Having this digital sandbox lets you see exactly where your money is going for the next 15 to 30 years. And the best part, you don't have to commit a single dollar to find out. You get to visualize your exact future risk-free. And honestly, playing around in this digital sandbox is ridiculously easy. Step 1, you just punch in the home value or purchase price. Step 2, add your down payment. You can use a flat dollar amount or a percentage, and the tool updates everything for you automatically. Finally, step 3, input your estimated interest rate and your loan term. That is literally it. You do not need a Wall Street finance degree to do this. In seconds, you get a crystal clear, accurate look at your future monthly obligations. Let's move to Section 4 and see how this builds, testing mortgage scenarios. Okay, get ready for a major aha moment, because here is where running your own numbers becomes incredibly powerful. Say you're eyeing a $300,000 home. Put 5% down and your monthly payment is roughly $2,150. But if you manage to hit 20% down, boom, it drops to $1,780. That is a massive $370 difference every single month. Just tweaking one single variable completely transforms your reality.
Plus, the calculator lets you test out different loan types to see what actually fits your life best. Maybe you want the long-term stability of a fixed-rate mortgage where your interest rate stays completely locked in. Or maybe an adjustable rate mortgage makes more sense if you're only planning on short-term ownership and want that lower initial rate. You can even test out an FHA loan, which is amazing for first-time buyers with lower credit or smaller down payments, sometimes needing just 3.5% down. Or check out VA or USDA loans that can offer literally 0% down for veterans or rural buyers. Testing these options digitally lets you find the perfect fit before you sign your life away.
All right, wrapping things up with Section 5, Smart Prep and Next Steps.
So the crucial point is, once you have these digital estimates, how do you actually prep before talking to banks like Chase, PNC, or Stockton Mortgage? Well, it starts with one magic number, 740. That's the target FICO credit score you should be aiming for. Hitting this score or going even higher unlocks the absolute best interest rates available, which can literally save you tens of thousands of dollars over the life of your loan. Next up is 36%. This is your critical debt-to-income or DTI ratio. Basically, lenders are comparing your total monthly debt to your gross income. Keeping your debt below 36% proves to these lenders that you can handle a new mortgage safely without overextending yourself. The good news? You definitely don't have to navigate all this alone. Kentucky has some amazing state-specific resources just waiting to be used. The Kentucky Housing Corporation, or KHC, offers down payment help, which seriously reduces the upfront cash you need to bring to the table. You can also look into mortgage credit certificates for annual tax credits. And honestly, combining these resources with a local mortgage broker, someone who actually knows how to expertly navigate the local market, can really help you lock in those lower interest rates. Just remember to keep using digital tools like amortization and refinance calculators as you move forward. Which brings us right to the core thesis of this whole explainer: calculate before you commit. Literally spending a few minutes online can save you decades, yes, decades of financial stress. Running your numbers through a Kentucky mortgage calculator isn't just a fun little exercise, it's absolutely crucial before you even start the house hunt. It is the only guaranteed way to make sure your dream home doesn't accidentally turn into a financial nightmare. So, what does this all mean for you? I'll leave you with this. Are you ready to take control of your financial future and calculate your reality today? The tools are literally right at your fingertips, and the power is entirely in your hands. Go crunch those numbers, explore your options, and step into the housing market with total, undeniable confidence. Thanks so much for joining me on this explainer, and hey, happy calculating!